a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Boy, there's no shortage of things to talk about that are impacting this recent market rally that we're witnessing, historic rally at that. So let's get right to it with our chief equity strategist, John Blank, who joins me via Skype from the West Coast. John, you wrote in your recent market strategy piece, you titled it Animal Spirits or a Bubble. I have to ask, which is it?
I think it's animal spirits at this point. A bubble is when we get over 22 to 25 in this forward P's. We're getting close to 18. We're getting up there, but I would say we're just riding the enthusiasm. So I'm going with animal spirits.
Okay. I also have to ask, are we still in the honeymoon period between the new administration in Washington and the market?
Yeah, absolutely, Terry. The Republican optimism that is taking this market up there was so much pessimism from that crowd, and they're the business crowd for 8 years, that their enthusiasm is not likely to go away for any reason for the next few months.
So you bring out the fact that traders right now are ignoring the wall of worry in any way, right?
Yes, I think so. I think it's basically what it is, and there's good fundamental reasons for that too, Terry. The oil and materials complex is rallying. You've got a broad S&P 500 earnings rally. The earnings recession is behind us. The global markets are rallying. So in the context of a new regime, you're also seeing very strong fundamental headwinds that are in place right now and have been building for about 4 or 5 months.
Okay, so you're talking about the optimistic camp. Let's talk about the flip side. What's in it for the pessimists?
The pessimist is the shock that can come out of some of the contentiousness within the international arena, particularly on trade negotiations. You have to keep your eye open for aggressive counter reactions, not only in the United States, but with England and the Brexit. The EU put out that they're going to stick a $100 billion euro bill on the English and make them pay it before they even start Brexit negotiations. So that shows you what's going to happen here.
Do you see at this point any black swans lurking in the shadows?
Terry, the black swan I'll put out there that I just found out this morning is that there really isn't that much strength in the energy and materials prices for the next 12 months. I think people are getting a little ahead of themselves on that. And the other area I think people are getting ahead of themselves on is the long-term interest rate hikes that are going to drive up the banks. I think that's probably going to take longer than people think. So my view is that black swan is probably a little stronger than that, but I would say that disappointment and extended periods of recovery that go out further than people think is probably what I think.
All right, now the Fed meets on March the 15th. We're talking here at the end of February. Do you see the next rate hike in the March cards?
Yes, March 15th, there's going to be a 25 basis point hike. I'll put it out there right now. That's my call, and I'm sticking to it. The reason is the stock market rally. You've got a 4.5% unemployment rate. You've got GDP growth, but now you have elevated stock market valuations. That's bubble. That gets back to the animal spirits of bubble. Plenty of people in the Fed Open Market Committee camp will say bubble, and they'll vote for a rate hike right now. So count on it in March 15th, at least as far as I'm concerned.
All right, let's talk sectors here for a couple minutes. You say at the moment financials are leading the pack.
Right, financials, you got to like it, but I would like Raymond James. I would like investment bank. I think you're going to see an M&A cycle pick up here, particularly when you get some favorable tax rulings and some better certainty about the policies out there. You've got to like Raymond James. You've got to like the financial sector.
Industrials, you say, moved up to very attractive status.
Right, yeah. The name I like in this space is a European name, Sandvik. You've got to like construction, and these guys make tools. Construction tools, heavy machinery tools. Sandvik's a name I like. You've got to like industrials because you've got to turn in Europe. So look in the European construction names. I think that's where you want to be.
And materials, you say, attractive.
Right, but I'm going to throw a name out there that's a little different. Again, a European name. I like the valuations over there. I like the PMIs that are picking up. Stora Enso Oy, which is a paper company up in the Scandinavian area. You got a nice, stellar, low-key story and paper products and consumption generally to pick up, and you can ride the momentum in the European stocks in a play like this without getting too overboard on something that's overvalued. So I like that name. I like that area. I like materials generally.
So with these last two stock picks that you just discussed, I have to ask you, does that indicate more growth abroad as far as stocks than here in the U.S.?
Yeah, well, I think it's not necessarily a trade-off anymore. I think we're seeing a reciprocality of growth in the United States and Europe and outside in Asia. You haven't seen all three of those regions move together in many years, and that's one of the strong bullish reasons we're seeing right now. That has nothing to do with the new president. It's just the fact that we got growth going on in the three major developed regions of the world.
Okay, John, thanks. That's the latest on the market from our Chief Equity Strategist, John Blank. And with John, I'm Terry Ruffalo.